Wow, what a difference a day makes. Woo! Okay, we're back on track. By the way, my next guest thinks that this bull market will remain intact for a number of reasons. So let's bring in UBS Global Wealth Management's head of U.S. equities, David Lefkowitz. And, you know, let's just talk about this. You know, what's ultimately the driver? First, your target is 7,700, right? That's sort of right, a little bit above the street right there. What gets us there, resilient economy, supportive Fed, AI investments, and adoption.
Right. I mean, Charles, these three things have basically been in place for the last 3+ years. And so I think the drivers that have gotten us here still have some more to go, right? We've got a resilient economy getting support from extra fiscal stimulus, the rate cuts that already happened last year.
Right.
So we've got this double-barreled stimulus, plus the tariff headwinds, you know, those are also coming down. So I think you're going to see a pretty decent economy this year.
It's amazing to me how much time we spend, at least maybe the financial media, guessing when this is going to come to an end instead of kind of enjoying the ride. It really is nuts to me, you know. And then I like the idea that you brought up the Fed cuts that are already in the pipeline. Before we would wait. We know it would take 6 months to a year before they kick in. We want them to magically solve all the problems in the very next day. So we've got all of this stuff in position here. But you do also point to a shifting in the drivers as well.
Yeah, exactly. I do think those three drivers are generally still very supportive.
That's your foundational stuff.
That's the foundation. Exactly. Right. That's the foundation. But yeah, there are some shifts in terms of the strength, if you will. So I think the economy is going to be a bit stronger than we saw last year for some of the reasons that we talked about.
I started the show with the latest Bank of America survey, and all of a sudden, for the first time in 3 years, no landing is number one. Everyone's kind of in the no landing. Are you sort of in that camp as well?
I don't exactly know what that means, but
I guess what that means is we never hit terra firma, and now I guess we're reaccelerating. Sounds like that describes what you're talking about here.
Yeah, no, I think it's going to be we think we'll see above trend growth this year because of that stimulus coming through. So.
AI investment, you know, that's been a central argument on Wall Street for a long time. How long can they keep spending this amount of money? Does it matter as much as it did anyway?
So I think things are shifting a little bit with the AI investment, right? I think the last couple of years, it's all been about the capital spending from these big tech companies just keeps on going up and up and up and up and much higher than what we were expecting at the beginning of the year. I think those upward revisions are probably now coming to a close, but we're still going to get good growth in capital spending. And I think the opportunity set is now broadening out to the companies that are using this technology to improve their businesses.
Yeah, I mean, and I think we saw that last year. Caterpillar, the #1 stock on the Dow Jones, it's deemed an AI play now. You know, we're starting to see it in a lot of different areas. That being said, the sectors seem familiar. Financials, healthcare, tech, and utilities.
Right.
I just want to ask about the top two, right? Because financials, that wasn't a great start on earnings season for the big banks.
Yeah, well, look, there was a little bit of a cloud because of concerns around the government getting involved in credit card markets and things like that. But, you know, the numbers themselves were quite good. I mean, capital markets activity, very strong. Consumer is doing fine. You know, CEOs are looking to deploy capital, looking to raise capital. So I think we're going to see some pretty healthy earnings growth coming through for the financials. And I would say this is a bit of a buying opportunity here.
Healthcare as well?
Healthcare also. Look, healthcare adds some ballast to the portfolio as well. Obviously a bit more of a defensive sector, but there's a ton of innovation going on. And if you're looking for untapped or hidden AI plays, just imagine the day that any large pharmaceutical company comes out and says, hey, we use AI to figure out this new therapy, right? I mean, there's a tremendous amount of latent value here if that happens. And so we want to have some exposure to that in the portfolio.
Not if.